Yeah, my general thoughts are North Asia is still preferred over South Asia. And part of that has to do with some of the structural reforms I'm seeing. For example, in Japan, the focus on improving returns on capital, which 20, 30 years ago was not the case. The emphasis was on a society approach, let's call it that way, to managing companies. So that's changing. I think the recent changes in Korea are very significant. The government in Korea has gone from a crisis management mode to a more proactive mode in trying to get ahead and dealing with issues before they actually happen. So you look at certain data like loan problems in society, bad debt, they've all increased significantly. And this is like almost a warning sign for the country to get ahead of this. So banks are being more proactive. And then, of course, you have that pivot toward the stock market, and again, Korean companies improving their corporate governance, improving their approach to how they manage the business. And then on top of that, you've had this incredible cycle of memory and AI that's continuing to evolve, all of which is beneficial to not just Korea and Japan, but all of Asia, and for that matter, all the world. So a lot of positive factors. But I would say, generally speaking, North Asia is preferred over South Asia. You've had some changes, for example, in the government. I think the political situation in Thailand has improved, and that market has responded in kind. A little bit more problematical is Indonesia for a variety of reasons, and it stems from the way Prabowo is governing the country. That needs to be seen over time. I'm somewhat optimistic that actually things and developments in Indonesia will turn out better than what is currently anticipated. So South Asia, a little bit more wait and see mode, very much more proactive on North Asia, including China. I think certainly some of it's been priced because you've seen new highs, and the Japanese market has now extended a high above what it achieved in the period in the 90s, or early 1990 to be precise. So the question is, does it have more upside, as you correctly ask? And the answer to that is yes, in part because I think there's a re-rating story happening in Japan. It needs time because there's a lot of doubt, and that doubt was seeded in 30 years of very low inflation, disinflation. Japan is coming out of that now. Initially, you have a weak currency because the rates are too low in Japan. They normalize their rates. I'm of the view that in the next 3 to 5 years, you're going to experience a phenomenal move in the stock market and the currency in your favor. So yen appreciation and a strong stock market. And Dhaka is what I refer to that as. It was seen in the latter stages of the great bull market Japan had in the 1980s, late 1980s. I think that's going to happen again. One of the issues for Japan has been the demographics. I think AI, automation, robotics are very good solutions to that problem. And so I see the efficiency gains, which are difficult to calculate, but they're happening, are likely to be greater in Japan than in many other countries. And so the scenario for re-rating Japan is quite strong, and that would allow the market to attain new highs. Yeah, that's a difficult question to answer because it's changing and evolving. So clearly you need management that has foresight, boldness to take on challenges that other managements are more reluctant to do. I think you start on the premise that you find a company that is either number one or number two in its sector, and then you look at the R&D spend, and then how that spend is delivering results. And so you need to look historically the last few years as AI has caught a nice tailwind, and then also look at the amount of the expenditure and how it's being applied over the next coming 2 or 3 years. That can at least give you a template to work with in understanding potential benefits that company may have relative to other companies. I think yes to both of those questions, partly because AI is unfolding at a pace that continues to dumbfound people. It's amazing, 2 years into this and the change is still very rapid. So that suggests that the earnings part of the equation is still fairly robust, as we're starting to see now. And then with respect to the other point, I think that in general Asia is really well positioned, in part from the way it approaches the use of AI in its application. So in the long run, my suspicion is that Asia has a much greater, go back to that earlier comment, and that Asia, I think, has a much greater potential to re-rate in general, okay, versus other markets. The China market is depending on your angle, or the lens, if you will, that you're looking at, does pose issues. I'm looking at it somewhat more optimistically because I think the U.S. has misplayed its hand on the technological front. And that's not the right decision, I think, because China is very capable in time of developing her own technology base. So the second part of this is to do with buying industries that have a higher probability of success no matter what the regulatory environment is or the global situation is. And I turn to healthcare as one example. I think this is ubiquitous in all countries, to be honest, because of the demographics, but it's particularly acute in China with her demographics, the aging population. And China has the ability to make this happen, to make this an industry that China is best of class or among best of class, just as the US became best of class and some companies in Europe as well. So I really believe the government will be supportive of the healthcare industry, pharmaceutical industry, biotech. Already to this day, China is ahead on some fronts, whether it's clinical development, clinical trials, that is, out to phase 3. China is cheaper, faster, and in time, maybe that happens also on drug development, and AI can facilitate that. It's a necessary requirement because of the aging population that China has the toolkit to treat that population as it ages, and so people live lives longer and with better quality. So I think everybody wins in that scenario, including countries outside of China. So I do think that's one area where I think China can accelerate. And the other side to China is they need more of a balance in her economy where the consumer plays a larger role. The consumer has been playing a larger role. It just needs to play an even larger role. It's kind of hard for that to happen with property, which was a single asset where the consumer was involved. So they had balance sheet destruction from that, or at least some people did. But the savings pool is still high, and I think in general, I suspect that the Chinese consumer will play a larger role in the economy. I'm not suggesting that it's going to replicate how the U.S. consumer, because there are different behavioral patterns. But I do think in terms of spending, the Chinese consumer part of spending should increase, and you get a better balance in her economy as a result, and then China will benefit from that. So somewhat optimistic on those two fronts over the next 3 to 5 years. Yeah, there's a lot there. I just sense that people generally are too easily swayed by the moment and lack a longer term vision. And I think you should move away from that, even though the numbers are moving to that. When I say the numbers, the number of investors that are moving to that. I think if you take a step back and take a longer term approach and really try to find companies, and I know that the drawback to what I just said is that for many people it's just easier to buy an ETF. And okay, so maybe you buy an ETF on Japan and that is it. But I think you can do a lot better by taking a longer term approach and buying companies that have shown themselves to improve their earnings base over time and consistently. And of course, short of that, you can do research on fund managers and look at my fund and what it's returned, and that I've been managing it for 34 years. That's worth something, I think. So I'm sympathetic to an individual investor. There's more than one way to go about it, but the underlying theme is just take a longer term approach and stick with it. I've given some examples of what I think are very strong secular trends favoring countries in this region: Japan, Korea, China in the long run. Taiwan's very well positioned. And even in Southeast Asia, some opportunities are emerging. So if you come at it with buying a fund that gives you that opportunity set, then the question is that manager capable? Have they delivered for you? And there are some very good fund managers out there. And so I think that's your opportunity. And short of that, you could just buy the ETF for the region. You would probably be well placed to do that. And stick with it, though. I mean, if you lose 20%, buy a bit more. I think Asia is going to be around for a long time.